There is a bit of selling pressure. There is a bit of selling at higher levels, which is coming through. That's the day so far, which kind of described what has happened so far. You're with us here on a fresh new edition of Closing Bell, coming to you live as always from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Afternoon.
Hi. We've come off from the day's high, but the low today was 21,967. So from the day's low in the last 30 minutes, there has been that, 60, 70 point bounce.
I think it's a healthy trading session actually, because you can't just keep going one way up, right? Some bit of a pullback, some kind of consolidation actually will be a very, very healthy sign. And in the last 30 minutes or so, you have the metal stocks that are moving higher because there is talk that China is going to push through another stimulus. We'll see how much of it comes through. But that's why the big gainer in the last 1 hour or so is the metal index, on hopes that China is going to pep up that economy, and hopefully, in fact, that's what will stabilize metal prices and give it a bit of a tailwind.
Oh, absolutely. And we'll talk more about that in greater detail as we kind of go on. But, so by the way, the Nifty did manage to make a small, I think about an 8-odd point higher high, which means that there was a minor new high on the Nifty, which happened early on. And then there's been selling which has emerged. We were discussing in the morning about possibilities, right? And just asking the question whether the market is closer to kind of completing completing an up move, and then, it takes a more sustained kind of a break, which we've not had. We had a fortnight worth of break, but then, the market broke out in spectacular fashion last Friday, and then by yesterday's close in 2 days, it had added about 450 odd points. Anyway, the support, the very near-term support is, again, the 40-hour exponential, which is 21,862. We didn't get to it this morning. We got, still a 100-point gap from today's low in that level, but that's the closest support. Nifty Bank is holding, is absolutely flat, but it's holding just above the falling trend line. So let's see how the close is here. Midcaps and small caps, the indices were down 1 and 1.25%, but there is a pullback, and they've basically cut their losses in half. Market breadth is sharply favoring decliners, and last I checked, it was almost 3-1 in favor of stocks which are down at this point in time. Very few sectors up, and actually I think only about 1 or 2, and across the board there is a fair sense of profit booking, which is out there on the screen. Reema.
Well, Asia was also firmly lower today. So Hang Seng ends with a cut of more than 2%. You had a cut of about 1% plus on the Taiwanese markets, Korean markets. Europe right now is seeing losses to the tune of about 0.5%. So even the global backdrop is a bit subdued in today's trading session. The sectors which are weak, Realty sees a bit of profit taking after a 10-11% rally from the beginning of the year. So the Nifty Realty Index is your top sectoral loser. IT, after gains over the last 2 days, is down 1.3%, and Pharma too is giving up some of yesterday's big gains. On the gaining side, very few, but as you pointed out, it's metals which has had a spring in the step in the last 1 hour.
Yeah, that's what, the hopes of China coming back to normalcy is something that is exciting some of those ferrous as well as non-ferrous players. But I think for the final hour of trade, we'll have to keep an eye out on the Nifty Financial Services Index. It has the weekly expiry that plays out, so that's going to be important. And HDFC Bank as well, ahead of its numbers, that's going to be the one that will move the Nifty Bank. So financials and banks will be the focal point for the next 60 minutes or so. But let's get in a quick technical call on the index and see how do you trade from here on. Yes, we're lower, but we've recovered a fair bit. Rahul Sharma joins us on the show. Hi, Rahul. Good afternoon and good to see you in. What's the view on the index? If you look at the PCR, you look at the FI positioning, you could look at the India VIX as well, which is creeping up a little bit. There may be signs that maybe some kind of consolidation would be par for the cause. What's your view at current reckoning? Buy the dip? And if yes, what are the levels?
Very good afternoon, Nigel. There's this saying that do not question your wife if she's out for shopping, and equally the bulls if they are bullish. The kind of dips, the way the dips have been bought into the last few sessions is testament to that fact. Now, there are some areas of the market which are screaming extremely overbought. Like, for example, the Nifty 500 index, the weekly RSI is at an 18-year high. The small cap and the mid cap indices, the monthly RSI are at 17-year high. So clearly, this market is, probably done with 95% of the move that was supposed to happen in this leg. In the last, 5%, we could very well head towards the 22,300, max 22,500 on the upside. So, we are very close to maturing this move, and the best thing to do is, unless these levels are achieved, dips like today, for example, the way Nifty bought the dip, we were down about 125 points at one point in time, and now the dip has been bought into. So it seems like as long as we are above the 21,700 mark, it should be a buy on dip market. 21,700 is a very strong technical support going into the last few days of January series. And on the upside, 22,300 to 22,500 is where we are expecting the Nifty to sort of, test or, the next challenge for the bulls. So it's a buy on dip market as long as this level gets sustained. And sectorally speaking, I think one sector which clearly looks very strong today is the metal index. Metals, back of developments happening in China, whatever the reason may be, but technically, this sector looks pretty solid. Risk reward is favorable. We feel that in another round of up move could happen in the metal index, where we could see a move around 4 to 5% from these levels, which means stocks like Hindalco, stocks like Nalco, stocks like Tata Steel could do extremely well from these levels. So metals remain our topic at this point in time, and overall Nifty is a buy on dip candidate as long as 21,700 does not get broken.
Okay, so betting on metal stocks, that's the trading approach on individual stocks. Rahul, thank you very much for joining in. Let's talk about some buzzing stocks now. We have Angel One under pressure on the back of its third quarter numbers. Upasana joins in with the details. Upasana.
Well, Angel One has reported its Q3 FY24 numbers. The revenue stands flat at 1,059 crores on quarter-on-quarter basis. Total expenses have seen an uptick of almost 10% sequentially, whereas PAT stands at 260 crores with a downtake of 14% sequentially. The company has recorded highest ever client additions with an uptick of almost 16.2% sequentially, taking the client base to 1.95 crores with a growth of 14% on quarter-on-quarter basis. The average daily turnover of the company has seen an uptick of almost 21.4% sequentially, and turnover market share on quarter-on-quarter basis of equity stands at 26.8% with an uptick of 62 basis points, F&O at 26.9 with an uptick of 62 basis points, and commodity clearly outshines at 58.8% with an uptick of almost 212 basis points. So all in all, revenue stands flat, the PAT is down, but the client additions continue to remain strong for the company.
Okay, all right. Angel is taking a bit of a hard knock. Upasana, thanks very much for that. Dilip Bhatt is with us now from Prabhudas Lilladher to take us through what he's making of markets and stocks. Dilip, Angel One, I mean, the story is pretty clear and one of the easiest ways to play this entire capital market story. But today, taking a bit of a knock, would you take it in your stride? Is it a buying opportunity? How would you treat this one? It's trading at about, depending on what earnings you use, but I looked at Bloomberg, it's trading at about 22.5 times F5 25 earnings.
Sure, I think without any doubt, the model that they have and the franchising that they have is by far one of the, I mean, it's really producing some excellent set of numbers. So even despite the fact that the profits are down, but the client addition continues to be pretty good. And that is something which everybody keeps on looking at. And we too surely will be keeping a watch on that. I think that is absolutely inspiring the confidence. So Angel is not cheap. But I would say that on a longer term basis, if one has to have an exposure in this particular segment, Angel certainly is one of the strongest contenders and candidates for that. So I would say that, yes, I would be interested, but I would prefer to wait and watch. But on a long-term basis, real long-term, 3 to 5 years, yes, it certainly looks good. But immediately it doesn't look all that attractive from the valuation perspective.
Okay, got the view on Angel One, but in the entire, wealth management, brokerages, exchanges, to play on the rising penetration and the equity cult that's developing in India, which one would you bet on right now, where the risk reward is favorable, valuations are fairly attractive?
Well, within the space, I think the Motilal still continues to look pretty interesting. I think there are some, each of the verticals look pretty promising. And on a longer term basis, I think Motilal still looks very compelling every which way, from the prospects of the growth, from the way they are managing some of the businesses. And also from the valuation perspective, I think one gets a lot of comfort over there, and especially since the management, without any doubt, is simply A grade. So I think Motilal is something which we would look at from a longer term perspective.
Okay, all right. Dilip, stay with us. Let's get in Abhishek. He's here to tell us about Paytm. The stock is higher after UBS has initiated coverage on the stock with the buy call. Abhishek, take it away.
Well, Nigel, as you mentioned, UBS has initiated coverage on Paytm. They have given a buy recommendation, target price of 900 per share. They say that continued monetization and EBITDA break-even will drive the re-rating for the stock. So they expect 21% CAGR with respect to top line between FY24 to 28 for Paytm. So contribution margin has already improved to 55% of revenue, and EBITDA X of ESOP is turning positive for the company. So company would break even on EBITDA in FY25 and reach 20% EBITDA margin by FY28. So in terms of consensus, their estimate is anywhere between 8% to 14% on the higher side for FY26 to 28 numbers. So payment leader with strength across merchants and customers. And if you take a look at the valuation, they believe that Paytm is trading at a material discount to global and Indian internet peers with valuation of 18 times FY26 EV to EBITDA and about 2.2 times EV to net sales of FY26. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Dilip, what do you make of Paytm? The stock is up close to around 4%. It went dancing away to 950. Then we had that negative news flow that came in there. But would you bet on it at around 740 rupees?
Nigel, I'm not too sure. I mean, one will certainly have to revisit the numbers and what are the future prospects in terms of the nitty-gritty. But certainly, I think as a macro story, it will continue to look very attractive. But when it comes to valuations, I think it certainly looks, in my opinion, pretty exorbitant. Not the one which I will like to chase even from the current levels. I would prefer to wait and watch and try to do some more homework before I really think about committing into the stock.
Dilip, so I'm asking you sort of a question which I mean, we don't usually put to you, but do you think the market after a sharp run-up is primed for a bit of a pullback here? Any thoughts at all? Markets near term.
So, well, I think we all know that markets are simply significantly ahead of the intrinsic valuations and the fundamentals. On a longer term basis, yes, but on a short term basis, I think one needs to be extremely cautious, extremely watchful, because I think even if you miss out on some rally here and there, it doesn't matter. But I think one needs to be a little more careful because I mean, the euphoria comes in a different way. It is not necessarily just because the frontline stocks are not in euphoric state, it doesn't mean that market is not in a euphoria. I think it's a mixed bag. A lot of stocks are really trading at an exorbitant valuation. So looking at the market as a whole, I would say yes, I would be very happy if there's a correction, but doesn't look like, because you have such a strong tailwind support from FIIs. And maybe if on a macro basis, if the interest rates continue their southward journey internationally, more money will be available for the equity, as we all know. So I think markets possibly will, it's going to be a buy on dip kind of a markets. But short term, yes, I will say that one should be extremely careful.
Extremely careful in the very near term. Thanks for that, Dilip. Stay with us, though. We'll take a quick commercial break here. More questions for you on the other side. Stay with us.
Welcome back. Taking note of an incident where passengers were deboarded from an Indigo aircraft were eating meals on the tarmac. The DGCA has now issued a show-cause notice to the Mumbai airport and Indigo Airlines for violation of aircraft security rules. Danish with the details.
Well, that's correct. The government has served a show-cause notice to both Indigo as well as to the Mumbai airport. The main reason for this is the fact that neither the airline nor did the airport anticipate that what could happen in case of a flight delay, because this particular flight was diverted and it landed in Mumbai for some time, and then we saw that those passengers were having their dinner on the tarmac. Moreover, the ministry has also alleged that the plane was not parked in a particular spot. It was parked on a remote bay, and because of this, the passengers were denied basic facilities like using a restroom, or having food and getting those options like that. So hence, this show-cause notice has been served. Moreover, neither did Indigo nor did the Mumbai airport inform Midcaps about this, and hence this show-cause notice has been issued, and they have been given time by the end of the day to submit a reply, and the government is waiting for them to reply. And in case if the airport or the airline, they don't reply on time, then we might see that the government might put some kind of financial penalty on Indigo as well as the Mumbai airport.
Very much for that. Dilip, from a financial investment point of view, this perhaps is seen as more noise. It seldom impacts the financial performance of the company. Even if there is a penalty, it's not significant in that context. And we are also hearing about a lot of passengers who are unhappy, displeased with the kind of experience they've had over the last 48, 60 hours. But keeping all that noise aside, do you like Indigo Airlines? Because the opportunity is huge. It's cornered a lion's share of the market share. Everyone's traveling and everyone's flying. So thoughts on Interglobe Aviation?
Rima, I think this sector itself looks very good. I think there are just 2 to 3 players. It is not very flattering to hear all this news about what really happened with the passengers. But at the same time, it tells you a story that I don't think that passengers do have a choice, really speaking, because there are only very few airlines. And I think as the crude prices continue to be neutral, or maybe, if it remains around these levels, small up and down from the current levels, I think this airline sector will continue to do very well. And the kind of growth that we are talking about in per capita income and all that, if that were to get translated into some of these factors, especially the passenger air traffic, I think it bodes extremely well. Yes, I would certainly look at Indigo as a part of the portfolio, though it has moved up quite a bit. It is a little more expensive. But I think this is a very sustainable long-term story, especially in terms of the volume growth that can happen.
Redu, I don't remember who said it now, but a tweet where it says that it's quite interesting to see that railway stations more and more are looking like airports, and airports more and more are looking like railway stations. But it's also a good thing, right? Because so many new passengers, first-time flyers. I mean, you just have to go to any airport. I mean, the Bombay airport, Delhi, the big ones, and it's full up. Doesn't matter if it's 7 in the morning. Doesn't matter if it's the afternoon, evening. I mean.
If you look at this travel theme, Prashant, and just to look at an ancillary company, yesterday you had one of these notable PEs, Lighthouse. They put money into Safari, and Safari we know has been a big outperformer in the last 1 year, 2 years, 12 months, whatever. So some of these companies, they could be ancillary plays, because you'll be wondering, someone is putting big money at when the stock is already up, say 10 times in the last 5 years or so. So this travel theme looks like it's up and running. You have reports about the number of planes that have been ordered by Indigo and as well as the Tata Group. Yeah. So it seems this is really heating up. The only problem is how much can we afford? How many leaves can we get? That's the only worry. But otherwise, this theme is really up and kicking.
I think some of these, because if you look at the actual travel, I mean, there's one airport listed, right? There's only practically only one airline that you can buy. Yeah. But some of these other, luggage makers, I think that's where a lot of this will come through. Or, for example, hotels, etc. Right? Exactly. That's the other one that one looks at. Dilip, anything of any of the names apart from, of course, Indigo that you track, you like, you own?
I think within the allied sectors, maybe VIP still looks pretty interesting, because that's one of the like the ancillary industry as you have an ancillary industry for auto, I think this is one of the industries which serves the travel segment. So VIP industry looks pretty interesting from the current levels. And I think that's a stock which still has a lot of potential, which can be unlocked in a big way. And I'm sure that some of these are being done. And I would say that I would pick up this particular one. And I think apart from that, hotels, of course, is a very well discovered story. But from here on, also, I think some of these hotels will also look, some of the stocks will look pretty good, because we find that even today the rates, the occupancy rates are pretty high, and the average rate still continues to be northwards, even if there is a non-season or an off-season. So I think this hotel industry, and within that, I would say something like Indian hotels, or I would say Taj GVK, some of them look pretty good and interesting. Even East India Hotel looks pretty good from the prospects.
There is another travel play, though it's more for international travel, and that's BLS International, a company which provides visa and consular services. And yesterday, the company made an acquisition which is about 450 crore rupees when they went and acquired a Turkish-based visa consular services. The stock today is not doing anything. It's down close to about 0.25%. But in the last 1 year, the stock has seen a rally of 135%. The company has been talking about making acquisitions, expand in size. They had ample cash of more than 700 crore rupees on the books. And now using those internal accruals, the company has bought in Turkish visa and consular services. So, exactly like exactly the same business model as the company, but it only, increases their scale for 450 crore rupees. Another one, Federal Bank is trading lower after a slippage spike in the third quarter. Abhishek is here with the details. Abhishek.
Well, the internals look to be on the weaker side for Federal Bank versus estimates. Let's take a look at the PNL. The NI is almost in line with our poll. Now, other income actually drove the earnings for them, and there was a stake sale in Fedfina that they did, which accounted for other income in this quarter. OPEX, that remained elevated, growing at 5.9% quarter-quarter. In that, the employee expense increased by more than 10% on a sequential basis. The PAT was ahead of our poll on account of the fact that, they had other income this time around. In terms of key ratios, net interest margin has declined sequentially. The ROA, or return on asset, is the highest that you are seeing in last 34 quarters, coming in at 1.4%. Now, RWA to advances ratio, that spiked up. Now, the general trend was RWA to advances ratio was on a declining trend, but in this quarter, you are seeing RWA to advances rise for many banks, and for Federal Bank, it's at 21-quarter high of 90.9% when compared to 87.8% in the previous quarter. As you mentioned, slippages spiked on a sequential basis. So slippages have come in at 496 crore versus 373 crore in the previous quarter. Gross NPA and net NPA in absolute value have increased more than 4% quarter-on-quarter. And for the first time in last 14 quarters, you are seeing a spike in gross NPA ratio. That is, sequentially, gross NPA ratio has inched up for the first time in last 14 quarters, coming in at 2.29% when compared to 2.26% in the previous quarter. Net NPA ratio has remained flat on a sequential basis at 0.64%. Back to you.
Okay, all right, Abhishek, thanks very much for that. That's Federal Bank. And of course, a little later, Abhishek will come back and tell us about what to expect from HDFC Bank. That's, of course, a little after market hours today. Amit Gupta is Senior Vice President and Fund Manager at ICICI Securities. He's ICICI Securities PMS. He's joining us to take some questions. Amit, good to have you with us here. I just want to start very briefly with a very quick sort of near-term Nifty kind of view. We had Dilip Bhatt earlier who was telling us that in the near term he'd be extremely cautious. Is that a view you share from an overall market perspective, or are you pretty okay?
So as I said last time, the market actually has remained cautious from even 18,000 levels. So I still remember that even that time when S&P had come down to the pre-pandemic levels, we were still, 5,000, 6,000 points higher than the pre-pandemic. So that cautious, actually, cautiousness came actually from those levels. But now here, if you see the Nifty earnings growth, it is around 17%. And you compare developed markets to emerging markets, you will not find this kind of earnings growth except one market, which is Taiwan. In Taiwan, it is around 18%. But unfortunately, because of the China, moving into Taiwan, we have seen the foreign institutions, they have kept themselves away from that market. So its P is around 16, but our P is around 20, but PG is around 1.25. So this is where India is still attracting the flows. It's very important because US PG is around 1.65. So that means if somebody says that interest rates are going to cut in US and US markets can start outperforming, but India is still attractively valued from that perspective. And this is where I think this kind of move has continued. Yes, it is a little sharp, no doubt about this. We have spent 2 years around 17,000, and now within 1 or 2 months, we have moved up by almost 2,000 points. So obviously, this move has been a little more sharp. But I think there are still opportunities in the market. If you can capture low price to earning and earnings growth of around 20-25%, you can capture this in those stocks which are coming out after long consolidation. This is where I think one needs to focus now in the portfolio buildup.
Okay, all right. Hi, Amit. Good to see you in. Nigel on this side. By the way, at the bottom of your screen, you have GQG, the big fund out there. They've gone ahead and increased stake in ITC. Last few days, we've been hearing some buzz about them putting in some money, but this is official, so we'll go with that. That's on the BSE. They've increased stake in ITC by close to around 1.2% over the past quarter or so. But Amit, just before you got on the show, we were talking about how the rush at railways, at airports, maybe both are looking like each other. Railways looking like airports, airports looking like railways. That discussion for another day. But how do you place this theme? I recall you're like a couple of hotel companies, Lemon Tree, if I'm not mistaken. Tell us what's your view.
So yes, I mean, the infrastructure is definitely coming up, but I think the domestic tourism focus of the government, I think from Ayodhya to Varanasi, even if you look at Jammu and Kashmir, we have heard the Jammu and Kashmir economy now has started growing by double digit, almost 40-45 hotels. Maybe they are actually going forward there. I mean, you look at Navi Mumbai now. So after the new bridge and the airport now, you will start seeing the new hotels also coming up actually in Navi Mumbai. So the luxury segments were doing good. They are still doing good. But I think the mid-size segment, if you have a limited players listed, so that is a growing theme. So Lemon Tree, if you see the revenue CAGR of this particular hotel, it is growing by 23%. Even EBITDA is growing in excess of 22%, which is much higher in comparison to other hotels. I understand there is some debt in the books of around 1,600 crore something. But if they are increasing the tariff rates, you have seen the average room rate has increased by 17% now. If it is happening like this, they will be able to pay off the debt. And I think the market is giving that kind of move to the stock now itself. It will not wait for the complete debt to be paid off. And this is where the stories are coming out now. So this is one thing, one story which is part of our portfolio. And we have a good size of holdings actually there.
Amit, afternoon. Even telecom is a space that you like. Now, there are very few direct telecom plays. There is Bharti Airtel, there's maybe an Indus Towers, a Tata Communication. Which ones are you geared towards? And tell us what would be the key catalyst? And especially your own estimate on that tariff hike or a price hike. When do you think that's forthcoming?
So I think the last tariff hike in telecom came in September 2021 in the prepaid space, which is a major part of the revenues of the telecom companies. So now we expect that post-elections, it is possible because it also impacts the inflation. So it is possible post-elections, you will start seeing some kind of tariff hike now. And our tariffs, as you know, they are already one of the lowest in the world. So $2 per month that they are paying, and the other countries, easily they are available at $6 per month or higher. So it is expected that 1.5 times of tariff rate increase in the telecom space in the coming 4 or 5 years is going to happen now. And this is where the average revenue per user of the telecom companies, which has already started getting some acceleration, I think it will happen more. So Bharti Airtel, which has crossed 200, it will remain the top bet actually in our portfolio. And you are seeing now, so the stock has recovered actually very fast from 1,000 now. And we believe going forward, almost 400 billion rupees of free cash flows are expected in this particular stock. And this is where I think once your 5G capex is already built in, and if you start showing that kind of tariff rate increase, the revenue obviously will get a much higher impact. And then the next is 5G applications, by the various industries. That is still awaited, but that can be a good trigger actually going ahead.
Amit, Angel is selling off. I mean, actually, I just looked at IIFL Securities. That is down about 7.5% as well. Any thoughts on these names?
So you're talking about the broking companies?
Broking companies, yes.
So I think, see, as per the capital markets, if you are seeing now, I think the market is getting more broad. The cash volumes are going to increase. So my sense is the capital market, participants, they are going to do much better going ahead. And you are getting events now. So near events, you see the further increase in the volumes. So we have Indian election, then we have US elections, and then you may have a scenario of interest rate cut also. And this is where I think when you have events, the market platform is looking good. And also, if you look at the macro perspective, when the dollar is weaker, when dollar index is still reeling around 101, the crude is lower because they have opened Venezuela. It is good for emerging markets like India. And this is where I think more stories can come up across the sectors. And this is where more research is also required. And I think these companies can do better going forward who are in the capital market space now.
All right, Amit, final question before we let you go. BHEL, people have been saying the rally is done at 100, 150, 180, 200, lifting up its back, double century. Do you think it's still that thermal capex play, and does it have more room to run ahead?
So I think thermal capex was not there from 2015 till 2022 almost. It was a -1% CAGR. So that means it was declining. But now we have seen that the plant load factor has almost reached to 78, 79. That means the capacity utilization has increased. And this is leading to more capex. And the government also has said that they want to provide 24 hours electricity now. So the connectivity has already reached to the villages. They are inviting outsiders and the local players more for manufacturing. People will work in couple of shifts also. They have to provide electricity. And this is where the thermal capex now is likely to grow by 20% CAGR in the coming years. And this is the reason BHEL has got the first move. But BHEL, the other benefit is they are diversifying their book now. And the book, actually, they are building up in the defense space also. They are coming out with a particular gun which they only produce. They have also done a consortium actually before with a Titagarh wagon for the Vande Bharat trains and all. So they are diversifying the book, which is good, I think. And the order book positioning actually has gone triple to the financial year 23, the last year revenues already now, which is a very, very positive sign. And this is where I think even if market consolidates, these stocks, which were the previous large caps, and they have come down, I think they can gain some strength. Definitely now, this may be a very good wicket for them.
Amit, we'll leave the conversation here for now. Thank you very much for joining. Moving on, AI and technology. These are the two buzzwords in the World Economic Forum currently underway at Davos. And top business leaders discuss embracing artificial intelligence and technology in their existing business ecosystem. Shireen Bhan, in fact, spoke to Bill Gates, co-chair and board member at Bill and Melinda Gates Foundation, about India's role in global climate and how it's innovating to improve healthcare.
Do you believe you're going to be able to raise the kind of money that we raised in the past? Or do you think that the macroeconomic headwinds and challenges, with the war and the uncertainty that the world is dealing with, it's going to be tough for you to be able to do that?
Yeah, the money going into particularly African countries with interest rates up, new loans are down, aid is pretty flat, and a lot of it's going to new activities. We're going to have to economize somewhat, but this is the most important work going on in the world, saving literally millions of lives. India is making progress. We piloted a lot of these new ideas there. And then scale them up to the entire world.
What's the one big risk that you're most concerned about today as you look at the world?
Well, the instability, that includes things like U.S.-China relations, that could slow down all this progress. And so hopefully you get reasonable works on both sides. And, India can play a role there.
what role do you believe India can play there?
Well, India's, setting an example. India works both with China and the United States. And we saw at the G20, it was very constructive to turn the attention to win-win relationships.
Welcome back. Well, we're telling you about GQG going ahead and increasing stake in ITC. Well, just pull up the intraday chart out there. It's increased by close to 1% on a quarter-to-quarter basis. It seems, the street likes that quite a bit because that one has spiked up to the high point of the day. It's definitely having an impact on the Nifty as well because that's a larger weight in there. So helping the Nifty a little bit. But as promised, it's time for our special segment, D-Street Chatter. Nimesh joins us to fill us in with what is he picking up. Nimesh, well, a bit of a wobbly day, but I think it's a healthy day, right? Every day you can't just come in there to bat and the markets go up.
Oh, absolutely. So, you rightly pointed out a bit of a choppy day of trade, but again, there are first signs of some bit of profit booking in the broader markets. The index is on 0.5%, but a lot of cracks are visible in the broader markets, in the mid-cap and small-cap space. But again, contrary to the screen, today the feedback is there is buying, or maybe there are buy flows at FIDs. In fact, there's going to be a small market at close buying as well, especially in the Nifty names at leading FIDs. So maybe that will show up in some of the Nifty stocks as well in today's trade. But again, the sector seems to be clearly the PSUs. Today is a day for the oil PSUs to do well. Yesterday, ONGC was part of my charter list, a lot of interest as well in ONGC as well. But the OMCs are buzzing in trade today. In fact, Citi has put out a note today and has put out a positive catalyst as well on BPCL. So OMCs are doing good. And we saw in the last one and a half hour of trade some bit of short covering in the metal names as well on the back of the news of a further stimulus from China. So metals could be an interesting thing to track going forward. But from a flow perspective, while the screen is looking weak, there is buying flow and especially small MOC as well in the Nifty names today.
Nimish, in terms of individual names, what's on your list today?
Hi, Bishan. So in terms of individual stocks, the first stock on my list is Polycab. It's been in the news for the last many days. For the last 2 days, though, we've seen a bit of recovery as well. The stock is up almost 6-7% from the lows what we saw 2-3 days back. Looks like some bit of institutional interest is back. I understand a leading domestic mutual fund is a buyer for the last 2 days. So all eyes will be on the earnings on 18. But I guess there are a lot of questions which needs to be answered by the management on the call in 18. So that's something to track very closely. The second name is BSE. It's only listed in NSE, but if you look at the chart, it's been consolidating with a negative bias. Looks like there was some selling pressure going on. Large part of the selling seems to be largely over, is what I understand in BSE as well in the last many days. The third stock is Jupiter Wagon, buzzing in trade today, but recently the company raised funds by QIP as well. Now I understand there's going to be a large block in Jupiter Wagons very soon, so that is something to track there. And the last is bunch of the IT names, both TCS and Infosys. Within the large cap Nifty names, these are the two names where there is buying, which is back in the IT stocks from the larger institutions. And additionally, there is going to be a small MOC as well in Wipro at a leading FIDS. So it looks like some bit of buying is back in the IT stocks today.
Okay, thank you very much for that. I was just looking at the chart of BSE. As Nimesh was pointing out, it's been consolidating. Pull up a 3-month chart. The stock hit a life high of 2,595 at the beginning of December, a 3-month chart. And since then, the stock has actually done nothing, since almost a month and a half now, where the stock has been consolidating. And now Nimesh is picking up some chatter on it. But the big stock to focus on will be HDFC Bank. Now, the press conference is scheduled at 4:30. Numbers are likely out post market hours or around market closing. Abhishek joins in with a quick preview. Abhishek.
Well, it's expected to be a mixed quarter for HDFC Bank, but largely on the good side or positive side. They have already given the business update, wherein the advances growth has been close to 4.9% sequentially, and that's led to sharp improvement in credit to deposit ratio. So the key thing to watch is that the net interest margin may remain stable on a sequential basis. Nomura expects our net interest margin of 3.4% when compared to 3.4% in the previous quarter. In terms of slippages estimate, Jefferies has estimated slippages of 6,300 crore. Morgan Stanley has 6,500 crore. Remember that in the previous quarter, it was at around 7,800 crore. So slippages could decline on a sequential basis, which could mean the asset quality would largely remain stable or improve on a sequential basis. In previous quarter, gross NPA ratio was at 1.34%. Now, what can impact the bottom line is the tax that they have to pay on account of the merger with HDFC Limited. So that tax outgo could be on the higher side. That could dent the earnings momentum on a sequential basis. Credit cost to remain stable on a sequential basis. We cannot compare YOY numbers because HDFC Limited is now merged with HDFC Bank. Hence, sequentially or quarter-on-quarter, NI is expected to grow at 6.2%, while profit is expected to decline by 1.8%. Back to you.
Okay, all right. Thanks a lot for that. And remember, you can catch the management commentary today at 4:30 p.m. only on CNBC-TV18. Okay, all right. Well, the markets have not moved too much since the last time we spoke to Rahul, but let's get Rahul Sharma back on the show. Rahul, what do you make of it? Today's session, first of all, if you had a position, would you square it off? And also, you have a fresh couple of calls. Please fill us in with that.
Yeah, so the way Nifty, is witnessing lower volumes in the last two trading sessions, it is indicating that, we are probably in for a small consolidation. Now, this consolidation could very well mean that, in case there are dips, these could be good buying opportunities like the one that we saw today. And structurally, as long as we are above the 21,700 mark, I don't think so there should be a concern, unless and until there is any major change in the other factors like India, VIX or things like that. Looking at the options chain, 22,000 seems like a very strong support as of now going into tomorrow's trading session. And what looks good at this point in time is metals. So, Tata Steel is something that traders can look to buy at this point in time, not only for BTST, but even positionally, Tata Steel looks good for at least around 4 to 5% upside from these levels. So target of around 140 to 145 and can be bought with today's low stop loss of 134. So Tata Steel is our top pick going into tomorrow's session. We feel that metals should outperform from these levels.
Thank you very much for that. We'll slip into a very short break with the news that the Nifty is holding above 22,000, but it is a cut of about 69 points on the Nifty. Sensex down 200 points. Jay Bala from Cash the Chaos joins in on the other side.
Okay, welcome back. The market is down a little bit more, 71 points now. So not being able to sustain. The pullbacks are there, but getting sold into. Now, LIC is doing well. And it's now, with the gains we've had over the last recent months, actually, on track to becoming the most valuable Indian PSU name. Yash is here with just the journey and some of the triggers which you can watch out for going forward. Yash, over to you.
Well, Prashant, as you rightly mentioned, the headline is, of course, that LIC is on its way to become the most valuable government company in the country. Right now, that title is with SBI, which has a market cap of about 5.72 lakh crore. LIC is almost there at about 5.7 lakh crore rupees. As far as today's day is concerned, with the kind of up move that we've seen in the recent past, it's crossed two important points today. 867 rupees a share, which was the listing price on May 17, 2022. And the second point crossed is 889 a share, which was the price at which shares were allotted to policyholders during the IPO. Now, as far as stock move is concerned, it's on heavy volumes, it's on strong volumes, 4 times 10-day average volume, the move that happens today. And the next two important price points, the next one will be 904 rupees a share, which was the price at which retail shareholders were allotted shares, and 949, which was the OG IPO price as far as LIC is concerned. The stock is up 10% this week itself, about 70% in this year. Now, there are 4 important reasons as far as this particular up move in the stock price is concerned. One is this whole chatter about a completely new and revamped digital strategy at LIC. Of course, the chairman has spoken about it. It's a new app which is, of course, in the works as well, through which onboarding, service and claims of all policies will happen. New product launches as far as the non-par segment is concerned. That pipeline is the second reason. Third one, dispensation as far as stake dilution is concerned. Government has given time till May 2032 for any further stake dilution as far as the counter itself is concerned. And the fourth one is the most recent one, that was the income tax refund of about 25,000 crore rupees. That also added a lot of value as far as the stock move is concerned. 2 important things to track when we talk about all these positives. The first one is that there is a very low public float as far as the company is concerned, just about 3.5%. And the second one, and more important one, the results as far as LIC are concerned, they are yet to show any material improvement so far.
Okay, thank you very much for that insightful takeaway. Jay Bala from cashthekiosk.com joins in now. Jay, after 2 days of a breathtaking rally, today there is a bit of profit taking. How would you assess today's trading session? What would your key takeaways be?
Yeah, hi, Rima. Thanks for having me on the show. See, the markets are still on an amber alert, and I'm looking for a trend change to come through. The markets are looking stretched and a bit exhausted, but the markets are comfortably above significant critical supports. So, while we are on an alert, we just want to market to confirm by going below critical supports. Until that point, we'll consider the market as still up, but with a lot of caution, which has been our view for the last couple of weeks.
Okay, all right. Jay, what about, give us a couple of stock calls first up, in case we run out of time. I believe you have a view on Atul Auto, which has, been one of the big outperformers. But you also have a bullish call coming in on UPL. That's been one of the big underperformers of 2023.
That's right, and you're spot on there. First, let me take on Atul Auto. Today's move is it doesn't look like a one-day flash. It's probably likely to continue. Of the 2 picks that I have, Atul is much stronger than the chemical stock UPL. So the stop loss below 533 and objective close to 750 is what I'm looking at in Atul Auto. Before I came onto the show, it was a little bit lower. Probably it's locked in 10% circuit now. And the other one is, as you rightly pointed out, and even as I mentioned a few weeks back, most of the chemical names are doing nothing much near the lows, and they've been underperformers. But right now, many names like UPL and SRFL are showing some signs of revival. So don't be too aggressive. Yes, it's just an early signal here. As long as the UPL can stay above 540, there is an objective possibility to 640. But don't leverage. Keep it small and in cash.
Okay, Atul Auto and UPL are the 2 stock calls. Jay, hi, afternoon. From the last time that we spoke, I think IT, so last Friday was that 5% big day for IT, and then yesterday also we got that 2% move. What's changed here, and are there any trades within the IT services space?
Yeah, that's right, Prashant. And I anticipated a high past the December highs, keeping the Jan 3rd, Jan 4th low as the stop for most of the IT names, and that's played out exactly. And right now, the setup is looking like it's clocked an exhaustive high. And I've been saying since for several months now, the move from the 2022 low looks corrective. And if the IT index were to drop below 34,200, that will be bringing in a bearish tilt to IT stocks. And TCS critical level is 3680. That's going to be the key stock. And Wipro, once again, it's clocked what we call in the technical parlance as a 5 down. on the intraday time frame for Wipro. So that's also looking quite weak now. So this could have been what we saw. The new high that we saw for Nifty IT might be an exhaustive high.
HDFC Bank, I remember we were chatting about it just last, in our last conversation. Now, HDFC Bank has had a good week, a 2.5% rally, going into its numbers quite strong. From here on, are you sensing a technical breakout?
Not sure, Rima, but three things we are watching. That's the support level of HDFC, support level of SBI, and the support level of the index itself. If HDFC Bank were to break below 1615, the market is sending a signal that it's not going to record highs. It's probably clocked a counter trend move from the 2023 low. But as long as 1615 holds, I think the stock is trending high. SBI, once again, similar level, 620 on a closing basis, absolutely critical. And we have seen the banking index come close to 46,920, but stay above it. But it's clocking a lower high so far. But if that support levels were given, I think it'll open the floodgates for much lower levels for the banking index.
Okay, real estate, Jay, I mean, I think you have a view there. You think the move has got more legs, and DLF is the strongest name there?
That's right. I've been bullish on DLF for several months now, and that still remains the best pick out there from the frontline realty names. Of course, you can look at something like Ajmera on a small cap, mid cap basis. They're also looking strong, but in the frontline, DLF is the strongest, and I had expected a move towards 820 on the Nifty Realty Index, and it's overthrown that, and it looks like it's pushing towards 930. But this looks like the last leg within the move that started from 2023. So, a little bit of caution there, but, it's still, along with FMCG, still got higher moves to come through.
Okay. And all that glitters is gold or not? Gold and silver. What's the take out there?
The best thing one can do right now is, wait now and then fade the next move. If gold were to clock record highs or fresh 52-week highs, I think that needs to be sold into. But my opinion is that the probability of gold and silver dropping first towards gold towards 1885 and silver towards 21, that looks more probable. So once again, if that were to come through, you fade that move to get bullish on the precious metals, and that's the setup right now. But from a slightly medium-term perspective, the dollar crosses are looking very strong. So be cautious out there.
Thank you very much, Jeff, for joining in. Counting down to a session of profit booking for our markets. The Nifty closes above 22,000, but it's a cut of about 63 points, 180 points lower on the Sensex. And this follows 2 days of good gains on our markets. And again, the cut is not very deep. And from the day's low, which was sub 22,000, the markets did see some buying, and the last 2 hours have been fairly stable. Midcaps too end with losses of about 0.4% with a negative advance decline ratio. We had nearly 1,500 stocks closing in the red for about 650 stocks in the green. The big losers came in from the Realty, IT, Pharma. These were the top 3 sectoral indices which ended deeply in the red. Realty down 2%, IT, Pharma down 1.5%. And on the gaining side, you had metals closing up with strength. In that, I think it's Tata Steel which catches your attention. Hindalco had a good day. ITC closing up smartly. Titan up 1.6%.
Well, in the broader markets, though you had the breadth of the market that was in favor of the number of stocks declining in comparison to the number of stocks that were advancing, but there were plenty of stocks that did do well. The new kid on the block, Jyoti CNC, it listed today and it listed in style, was up close to around 30% by the time we wound up. Then some of these PSU themes, well, they did well yet again. ITI, IRFC, both of them up 10 to around 15% odd. South Indian Bank as well did pretty well, and NFL. All of these I'm pointing out because they were the top volume traded stocks today. JM Financial as well up close to around 6% in today's trading session. And Tourism Finance, it followed up yesterday's 20% up move with a 3.5% up move in today's trading session. And Nalco, they're going in search of lithium in Argentina. Well, the street liked that. So that stock as well was up and about in today's trade. On the flip side, you had a few stocks that were under pressure. JP Associates was down in trade. Geo Financial Services was a little bit under the weather. And you had Vodafone Idea as well that pulled back close to around 5%.
Absolutely. I mean, so more red than green today is one of those days. Of course, I mean, we are wrapping up today's session, but very soon after this, you will have the big daddy of banking, HDFC Bank, which will report numbers, which I think should set the course, at least in the very near term, for the markets from here. So that's, I think, the bell which has gone off, and we'll end at about just above 22,000 on the Nifty in terms of trade. Market breadth sharply in the red, as we've been pointing out for the last couple of hours. I think it's a wrap on this edition of Closing Bell from all of us here. It's goodbye. Thanks very much for staying with us. Markets forward, though, will come up in just a bit. We'll take up all the action forward.